So it seems that you're calling for those long-term structural changes. Where in the region and in which sectors do you see those winners?
Sure. So maybe if I tackled the market bit first, obviously we continue to be very positive on wealth creation within China and the trends that follow from that. But I think the other big market that we have not necessarily discussed as much would be India, and that's a market that's also perhaps less battered by, for example, regulatory pressures or geopolitical tensions that a market like China has. I mean, if we just look at the past week, they released a budget that is going to prioritize growth. And we do see that certain sectors within, say, infrastructure or select financial names will do quite well within that frame.
What do you see in terms of quality names, especially when we continue to see perhaps some valuation plays as well?
Sure. So I think, as you mentioned, that has been quite a difficult balance to to deal with. You've seen growth to value rotations or quality to value rotations as well. And both growth and quality have been out of favor. So I think what we've been also trying to do is perhaps look for some of those names within the value space that actually are quality names that will grow over the longer term. So I think you actually do see, for example, within the tech space, and you look at valuations of a big company like Samsung, for example, that's it's not expensive at all for the kind of long-term structural growth that it has. So when we are able to find opportunities like this, that's what we would try to focus on a bit more.
How bullish has the reports of the state funds, the national team, so-called national team in China coming in to put a floor under the volatility in China? And does that give you, I guess, a bit more confidence?
Yes, so I think you're absolutely right. Being able to see that data point come through this week has been quite encouraging, I think, for many people in the market. Having said that, though, while valuations have actually come off to more palatable levels across many names, it's still quite a tricky market to deal with because, as we discussed before, they are facing many geopolitical tensions and regulatory pressures that have not really gone down. I mean, just this week, we saw 33 Chinese companies be included in the US unverified list, and the underlying names saw sharp sell-offs on the back of that. So the bottom line is, even with some support domestically, we just really can't take our eyes off the ball here.
We have heard a lot of analysts sound quite sanguine about the inflation risk, that either the Fed is going to recognise their limitations when it comes to addressing it and not be too hawkish, or that these inflation readings are going to start coming down. You are not quite so convinced that this is the case.
Yes, so I think inflation has been a risk that, well, not just a risk, it has been something that has pressured many companies. And it's been that way for quite some time now, as companies try to restart and supply chains are still working through many of the kinks that they've been facing over the past year or so. I think inflationary pressures would probably stay for a while. I think when we look at the current earnings season as well, and we speak to many of the companies that have reported, this is something that I think outlook-wise, they also don't see going away, at least in the next quarter or so. So I think that's something, investors do need to watch out for from a margin pressure perspective when we think about inflation and rising material costs.